Hey, everybody. I'm Jeff Richards, one of the managing partners here at GGV Capital. Welcome to Evolving Enterprise. Thrilled to be here with CEO of Smartsheet, Mark Mader, who I've known for a very long time. We went to college together. Mark, thanks for joining us.
Great to see you. Good to be here.
Can you do a quick intro of you and Smartsheet?
Sure. Let's hit the high points. Came to the U.S. back in 1976 as a youngster. Grew up in Seattle, Washington. Headed east for college at Dartmouth. Was not in the engineering field, but fell in love with software anyway through kind of a side door in a way through geography, and that was with geographic information systems. Fell in love with it. That took me to sort of a short stint pursuing a path in finance. And 2 years into that, I got reacquainted with some college friends who were my seniors, and got into software. That was probably what, Jeff, 25 years ago now, and have had two long tours. One with Onyx Software, which was a CRM player back in the client server days, like mid 90s to '05, and then from '06 to present day, Smartsheet. Yeah, two very different businesses. One client server selling to businesses, enterprises. The other one born in SaaS, born in the cloud, and serve a huge number of customers globally right now. I think that the commonality between those two is that they both were companies that I joined with fewer than 10 employees, and both companies went public. So we've had two runs at it, and while on the surface it looks really similar, they're actually super dissimilar. We're happy to share some perspective today.
Yeah, our audience is generally founders, of relatively early stage companies, kind of Series A, B, C. And what I love about Smartsheet back in the day, literally, I remember meeting you guys. I don't know what year it was, probably '08 or '09, and I don't know, you had 20, 30 people. I mean, it wasn't like a rocket ship from day one. I mean, you guys were grinding for many, many years. Can you talk a little bit about what the early days were like, and sort of just raising capital and plugging away at a big idea that people, a lot of investors didn't recognize was a big idea at the time. And today, Smartsheet's an $8.5 billion company, which is incredible. And kudos to you and the team. But it wasn't obvious from day one, at least to the outside world. Can you talk a little about what that was like back in the early days?
Sure. It actually reminds me of one of the most gracious dings we've received through fundraising, which was, "We think you're going to be really successful, just not soon enough." I'm like, I think that's a compliment. Anyway, so I would say what we had early on in '06 was a lot of conviction around there being something beyond docs and mail for productivity in the workplace. And that conviction has been with us for 15 years. And I think with some of the things that you don't get to control, while you might have a lot of conviction and you might even have evidence that there's a market for it, you don't get to control all the variables, right? So you look at the timing and the things that were happening in SaaS in '06, we still had a lot of companies graduating to like the primitives, like, "Hey, I got my calendar in the cloud."
Yeah.
And you're talking to me about like some type of collaborative work thing. Like, I don't even have my mail there yet. And it sounds crazy to us now, but back then, some other sort of dominoes needed to fall. And so for the first 2 to 3 years, we were able to build a product, experiment, see that there was signal. Like, people were saying, "Hey, that's interesting. We could have value there." But then we also had to exercise a bit of patience to say a few other things need to happen first. And by the time we were 4 years into it, which seems like an eternity, some of those dominoes had started to fall, and you started to get that early cohort of companies who had moved many of their mechanisms to the cloud actually be ready to take something on that was beyond some of those primitives.
Yeah, because back then, it is funny, you say it's obvious now, but like you think about '08, kind of '08, '10 is the time that the iPhone hit the market. That's when a lot of SMBs sort of got internet access, and it wasn't obvious that we were going to run all of our applications in the cloud. How did you guys get those early customers? I know there was a little bit of bottoms up and also some tops down, and that as a consumer or an individual user inside of a corporation could download the software and start to use it. But how did you start to, in the early days, start to go after those larger corporate accounts? Because that's for a lot of companies, that's not easy to go land your first few customers. How did you guys do that, and how did you think about it?
Yeah, it was really less about going after corporate accounts and more about being available to anyone. And in that, so think of it like, to use a fishing term, if you're going to target a species, like we're going to go catch a king salmon, you can do that, but you might also catch something else. You might catch a
Hmm.
dogfish, you might catch a rockfish, you might catch a halibut if you're fishing too low to the bottom. Like you and so when you target, you don't always you can't always anticipate or control what you get. So we basically welcomed anyone in, and it was tiny companies, it was mid-sized companies, and sometimes it was really big companies that we were actually not even well prepared to serve at that time. And what we learned through that was that there's actually quite a bit of commonality across the tendencies and the preferences and the needs of someone who is a team member at a small co and a
Hmm.
team member or leader at a big co. So we really developed an appreciation for what those similarities and commonalities were, and then over time, the huge differences that exist between those as well. And then figuring out how do you navigate that to serve, how do you navigate that to take advantage and better monetize. But so we weren't segmenting, we weren't targeting. It was basically doors open, come all.
Which we now think of as bottoms up software, and the entire market is sort of adopting that model. But you guys were early, and I'm guessing part of that was, how did you think about building the team? Today we can go find people that have sold in a or sold or marketed in a bottoms up environment. But back then, we were still looking at folks that had come out of Oracle and IBM, and even Microsoft, which was largely a tops down, sell to the CIO, sell to the CTO. So how did you think about building the team, and what were some of the key lessons learned in that bottoms up go to market model over time? I imagine customer success, churn. I know even today your net dollar retention is very high, and frankly hard for a lot of our companies to replicate. So what were some of the
Mhm.
lessons learned from that growth stage in terms of building out that team, and really setting a tone that the rest of the market is now replicating in many ways?
Well, I think you go back, and again, in hindsight, it makes so much sense. But in the moment, I remember what we used to celebrate. We used to celebrate every win. It's like, Jeff, I got a new one. It's like fantastic, new logo, and we're high-fiving each other. And then over time, you realize that the focus of the business is to go from winning to retaining to expanding,
Yeah.
right? Retaining and expanding piece is fundamental, and it doesn't matter much when you're starting. Your new bookings are going to trounce they're going to offset so easily the losses you have, and so easily maybe the reductions you have. So nobody cares about those two things at the beginning, or it's easy to forget about them, I should say.
Hmm.
And over time, you realize that, holy smokes, if we don't actually retain, if we don't figure out to expand, it's really expensive to build a consistent grower off of just new bookings. It's brutally difficult.
And
And
I don't think the public markets understood that either. To be fair, most
I would agree.
companies, you know, more than 5 years ago, most software companies, most SaaS companies weren't talking about net dollar retention as a metric that they shared. I know Salesforce didn't used to. And
Right.
then you saw this kind of new crop of companies, you guys and others, that have been sharing that and highlighting that. And I think the private markets have responded. We see more companies that have a focus on customer success and understand the value of land and expand. But that was not the mantra 10 years ago. And I really think Smartsheet's one of the companies that's really kind of pioneered that model for a lot of
Mhm,
other folks to follow.
mhm. And I think part of it, Jeff, is also recognizing when you're at a milestone when you should expand beyond what your comfort zone has been. So, for instance, early on, it was build a product, provide support, do some marketing. But when you think about intentional sales, like building a sales team, building a customer success team, that didn't come until many years later.
Hmm.
So that progression of knowing when it was time to take part of our energy and focus it on distribution, that was a really important milestone for the company. And
Hmm.
I remember the anxiety we had that first month. We spent like, I don't know, $3,000 on PPC. We're like, oh my God, we spent $3,000 on PPC. I can't believe it. It's like, so how do we instrument it? And then within not a very long period of time, we were spending like 600 grand a month. Right. So it's, but that focus, it seems so foreign, having focused on product, getting engagement, figuring out what people wanted, providing support. So that migration to distribution focused and being able to get the first dollar and to expand someone, you have to be intentional about it. And I think I remember vividly one of our board meetings when a question was raised, like, have you ever thought of hiring a salesperson? It's like, 400 quota carrying reps later, or however many we have right now, it's close to that. it's so funny to think that we actually thought we were gonna, like, we were operating a business with no salespeople at one point,
Yeah. But
and
you
that
were
is just,
selling, right? You and the founding team were you guys were running sales and marketing at least.
yeah, yeah. But I mean, again, that's not a repeatable,
Right, right,
scalable mechanism.
right,
So
right. So how
we
did
were doing
you? So
everything.
now maybe fast forward a little bit. You're working with your board. You guys are getting a feel for the market. You're getting to 10, 20, maybe 30 million in ARR, which is, by the way, not easy to do. How did you start to think about raising additional capital and investing more aggressively in the business? And what were some of
Hmm.
those critical milestones that you paid attention to?
Hmm. The critical milestone for us, I remember the $1 million ARR mark, and I remember the $10 million ARR mark very, very clearly. And right around, I think it was 11 or 12, we started to build out a sales force. And it was a small team, but they were dedicated resources who only did that. And I would say the ability to focus those team members was quite important, and also gave us confidence that we could measure the activities and measure the result of that. So we,
Hmm.
as opposed to saying, let's hire some new business reps, let's hire some expansion reps, let's hire some strategic reps, we actually took it. We solved for one thing at a time. So we're gonna hire new business reps. They're not focused on expansion at all. Then it was only about probably like a year and a half later that we hired our first expansion rep. And I remember thinking, oh my gosh, this is super risky. We're gonna have a territory that only sells into our base. Like 2/3 of our quota carrying reps now, Jeff, are only expansion. They don't talk
Yeah.
to a single new prospect. So I mean, you think about that change over time. But what helped in that build was being very, very disciplined about what we were trying to achieve next, and then adding to that. And it wasn't until probably 2016, 2015, when we hired our first rep to focus on large cos, like our strategic
Wow.
customer layer.
So you're 10 years in before you made the
Yeah,
leap
in
towards
earnest. Yeah,
enterprise.
yeah.
Yeah. How did you, were there other companies that you guys could learn from or playbooks that you leveraged along the way? Because again, you were, in my view, pioneering a lot of the expansion model and the net dollar retention model that many SaaS companies want to emulate today. But was there anybody that you looked at and said, "Hey, they've really done it right," or even that's an organization where we should be recruiting from?
Well, I think what we learned from, you asked the question about the role that investors played. I think that's where our partners like Madrona and Insight Venture Partners out of New York played a huge role. Like I remember when
Hmm.
Ryan came to us from Insight, the experience they had within their portfolio to say, hey, here are the patterns you should be mapping against, and here's how you can calculate your lifetime value, what you can afford to spend to get someone in, what you can afford to spend to expand somebody. Super helpful. So I think more of the company, and sorry, as relates to the investor and the kinds of inputs they gave us to give us the
Hmm.
confidence to model and to really step on the gas. And I think that's what became, like, we grew up poor, Jeff, right? From
Right.
from a million to 10 million of ARR, we burned $1 million of capital. 1 million.
That's incredible. That's
So
incredible.
this isn't like, okay, here we go, guys. This is
Yeah.
like hand to mouth. So the
Yeah.
transition from that type of investment posture to taking on whatever we picked up in our primary on that first one with Insight, 17 million, I think. Like, it was like, oh my God, what the hell do you do with $17 million? And then so it really was helpful to take a set of models and principles that others had proven and apply those to ours. So
Hmm.
when I think of the companies that I really respected, uh, growing up in my SaaS journey, it was the companies who did such a good job of just exercising, exhibiting repeatable growth. Right? It wasn't the, like, we're growing at 500% per year one year, and then it's like, oh, kind of a rough spot, and then back
Hmm.
at it.
Hmm.
It's those
Hmm.
consistent performers. And I mean, the obvious ones. I mean, Salesforce was a big influence on me in terms of why I got interested in SaaS. I was disrupted by Salesforce at Onyx.
Hmm.
I mean, I had a full appreciation for what it means to have an enabled prospect self-direct into a solution without IT having to be there at every turn. Really powerful. So
Hmm.
that was a huge motivator. I think the other companies, when I look at the choice one we made early around what type of SaaS company do we want to be, there are the SaaS companies who cater to a very elite class of buyer at very high price points, and then you have companies who maybe serve hundreds of thousands of customers at much lower price points. And so when you pattern match, it's not just, okay, is it a SaaS company, is it successful, but like, who are they serving and why?
Hmm.
And that's where we, in those middle years, Jeff, we were actually a little bit conflicted because we were serving very, very large companies who we knew had a high ability to invest, and we also served small cos. So I think you can do both. You just have to be very intentional about how you allocate your capital and what you're trying to achieve.
Yeah.
But there are so many examples now of SaaS companies who are doing well that there's a plethora of things you can pattern match against.
Yeah.
It's no longer just two or three companies.
Hey, let me, I know you've been very thoughtful and intentional about the way you've built the team and the culture at Smartsheet. Can we kind of shift into a little bit of that? I'd love to have you share some of your lessons learned along the way and maybe go back to that time when you were at 10 or 20 million, starting to scale, adding a bunch of headcount. Now you've got capital from inside and you're into growth mode. How did you think about team culture, executive hiring? Just maybe share some lessons learned there, because that, we get most founders that get to 10 million have great product market fit, right? They've created something that's working, there's adoption, there's demand in the market. But then you kind of hit that oh shit mode of like, okay, some of the original folks I had around the table aren't scaling. I've got, pressure to continue to grow fast. I've got competitors who are, well funded and fighting me, tooth and nail. How did you think about team building in the growth stage?
Mm-hmm. Well, I think one of the enablers, and I know you and I have talked about this in the past, but we were very clear about under titling right out of the gate.
Mm-hmm.
We didn't have a CEO at the beginning. I put a marker out that said, which was, we will not have a CEO until we get our first round done. Only on the heels of that round did we say, okay, we think now we're worthy of having a CEO. We didn't have a C-suite until we were 200 million in ARR.
That's
We had
incredible.
an SVP of sales. We had an SVP of services. We had a senior director of marketing. So we provided ourselves a little bit of an air gap to say, if we find that incredible player that we all respect, there's room. And so again, 200 million before we establish our C-suite. So that gives you a lot of latitude.
Yeah,
It's
we we
very
we
hard.
meet we meet companies with 10 people with
Yeah,
with four C-level folks. So
yeah, because it's a
that is
super
not the
tough
norm.
conversation. It's a super hard
Yeah,
conversation for me to come to you or you to me and say, hey, it's been a great run, but we got to hire another CXO. It's like, well, what do you mean? I'm the CXO.
right.
And that was something that we were very, very clear about. And I think in attracting talent, you want people to be aligned with you on that principle, right? So and that's tough because you find some amazing people who happen to either feel that they're should be treated or viewed or respected through title in a different way, and those you have to pass on those people. I would say, Jeff, in terms of I was just sharing with a candidate last week. When I look at the number of years my directs have been in the seat, I have 2.5 years, I have 1 year, I have 3 months, I have 4.5 years. Like everyone is under 6 years in the saddle
Hmm.
on my senior team. And it's probably under 5 years, actually. So when you think about that, over the course of 15 years, we have gone through probably 2 full rotations, maybe in
Mm-hmm.
some roles more over that period. And I would say the tough thing to do when you're younger in that maturity curve is to not overpromise, right? And these are little expectations you set along the way. And the degree to which you overcommit, and this is super obvious to you, the degree to which you overcommit has a direct bearing on how difficult that transition is. And in an ideal state, you never want to fire an executive. That exec should opt out. Now, I've done a pretty good job in some cases. I've done a pretty shitty job in other cases in that.
Mm-hmm.
And in the cases where I did a shitty job, I probably put too much emphasis on the, hey, you know what? You could be the person for a long time. And looking back, I'm like, why did I do that? I got nothing for that.
Hmm.
So, I think the one thing that I hold very, very strongly is don't be too formulaic about, people are going to give you great advice. Like every 2 years you need a cycle, every 4 years if you're on this type of growth. That's total
Yeah, there's no
bullshit.
formula.
Total
Yeah.
bullshit. But people still talk about that. So, and what I would encourage people to do though is to not load up an executive team or a leadership team within a single cohort. So like have a ladder.
So
Have
you
some
got some
people.
staggering.
Got to have staggering.
Yeah.
Got to have staggering.
So when you think about maybe you're now into pre-IPO mode, was that one of the rotations, or was going public for you just like, hey, it's another fundraise, we're good? And maybe just talk about your personal journey as a CEO and
Yeah.
a leader, because that's something a lot of our companies are thinking about, whether it's this year, 2 years, 3 years down the road, and trying to think about like, what do I need to have around me to be ready to be a successful public company?
Yeah, critically important that certain roles are filled. CFO, in whom you have confidence, preferably someone who has direct experience with either being
Hmm.
in the number two seat or number one seat. Legal, very important.
Yeah.
When you think about the mechanics of going public, your accountabilities to shareholders, your filing, all those things, compliance, those are things you don't want to be learning on the fly. Um, and I would say those are, I still talk to companies who are saying, who are about to go and they don't have those things filled. And I'm like, ooh, it's like, you recognize that if you have a misstep in your first year, you could be, trying to dig yourself out of that for two more. So do you
Hmm.
really want to do
Hmm.
that? And it's not like it's a guarantee, but it's a way to buy insurance in a sense. So I think the conversation with each team member one on one, not in a group setting, one on one around, do you understand what this means? Are you in it? And I would say the degree to which people committed, there was uniform commitment. Afterwards, there were probably about 10 to 15% of people who ended up being like, well, I actually didn't feel that way. So I think if you're sub 20% on your team, you're probably good. If you have like more than half your team, you're going to be having a really tough time. So
Hmm.
that's one thing where, one of the things I wrote down in sort of getting some notes together for today was the vital importance of trust. Trust is just, you have to manufacture, you have to create it, you have to spend time with people. You need to ask really hard questions. But if you are questioning that, do not go public.
Hmm.
Do not go out.
Hmm.
So and then you have to, back to the cohort statement, as you do make changes either in go to market or engineering. As a CEO, I think you need to really commit to that next newest team member. So if you're trying to give yourself in full to three people at the same time, you're probably not going to do a great job at it. So
Hmm.
again, to the degree you can, phase it.
And how about for you as a leader on a personal journey? One of the things we spent a lot of time with is the CEO
Yeah.
and her or his personal journey. Did you have mentors, advisors, coaches? How did you learn to develop and grow as a leader? Because going from a million of ARR to where you guys are today is incredible. And you've been running the company the entire time. So just talk a little bit about what you've done personally to adapt and learn along the way.
Yeah, I think you have to have this mentality of learning from others, right? And I
Hmm.
I love citing the people who have been helpful over the years. And you can't just receive it. You need to receive it and process it. But when I think about the things that people have done for us over the years, I remember being probably like, I don't know, we were probably 60, 70 million in ARR. And I got an invite from an investment bank to go to a bankers conference. I'm like, how the hell can I allocate 3 days to go to this bankers conference in whatever state it was? And I did it. And when I started meeting people I remember meeting Godfrey Sullivan. And Godfrey has done a
Amazing,
lot.
amazing
Amazing
CEO.
guy.
Yeah, yeah,
So I remember
yeah,
meeting Godfrey and his wife at the bar, and we'd start chatting. And I was like, immediately knew, for a person who had done what, 40, 50 earnings calls, I'm like, there's a guy I can learn from.
yeah.
Right. And what I found was that a lot of times those people are very giving, he especially, right,
Hmm. Hmm.
in wanting to coach. And so I was very grateful for that. So I was surprised that those bankers conferences were actually such a positive influence, getting to meet people who were open and willing to share. And then it's a matter of following up on some of those. Like if you meet
Hmm.
someone and you connect with someone, build a relationship. And I would say now, from a mentor standpoint, being post public and getting independent board members in, Elena Gomez, Magdalene Eschel, um, we have Rowan from 5 9. We have Mike Gregoire from CA. Many of those people I met through those mechanisms. So
Yeah,
just, that's 5 years later.
yeah. And did you think about as you met those folks and connected with them, were you looking for nuggets from each of them, or was it sort of like, hey, I'm going to get to know and build relationships with these folks and see where the journey takes me? By the way, I do want to come back to your point about attending conferences, because I think one of the challenges when you're in a high pressure role as a young CEO, many of our CEOs are first time CEOs, the majority are. You feel like, oh man, I can't make time for that 3-day conference. I can't make time for that 24-hour thing even sometimes.
Mhm.
How did you carve out the time? Did it become intentional, where you said, okay, I'm going to pick a few of these per year and I'm going to really look to do a little prep and homework and see who's joining? Or was it more like, I trust the judgment of the folks who've invited me? How did you carve out time? Because we do see that a lot, right? Folks are in high pressure. They have low amount of time to spend outside of their own team.
Yeah. So I think if you look at your role as a leader as the hub and all of your directs as the spokes, you're kind of screwed. So if you come out of
Yeah,
rotation for 3 days and you are the central exchange for all stuff that happens at your company, you
that's
will
such a
never go
great
on
way
that
to
three
put
day
it.
trip. You will
Yeah,
never go on that 3 day trip. So do you trust? When I look at Gene and I look at Mike and I look at Anna and Kara and Pete, our new CFO, and Paul, our CLO, like I trust them deeply. And when I
yeah.
go out of rotation, it's like we have a great team rocking and rolling. They're still making decisions. So that is key. So even back then, I felt like there were people who were operating and allowed me to truly not be like half present, but fully present in those.
Yeah, I get CEOs who tell me they can't take a vacation, and I tell them, you got the wrong team. I mean, if you can't
Yeah.
be away from the office for a week, you got to really ask yourself, do I have the right people around me to run these functions and run with things when I'm gone?
Yeah. I mean, and when I look at the last 10 years, Jeff, the only time I've been fully not in the office, like I should say completely out of the office, was when I was in the Grand Canyon for 14 days. That's the only time in the last decade. And people might say, wow, that seems like you don't have a lot of life, work-life balance. It's like, well, I happen to like what I do. So it's like,
Right, right,
don't be too quick to judge. So,
right.
I think one of the things that I've learned in the last years is I look at sort of what's the value of stress. We were raised by a lot of people who said stress is bad. Like, how do you minimize
Yeah,
stress? I'm
yeah,
like,
yeah,
I don't know. I think stress is actually really healthy, and actually try and generate stress, but also then be very clear about what you need for recovery. And I think
yeah. One of my
having gone public, stress is way up, Jeff.
Yeah,
Accountability is way up. So it doesn't ever subside because you have a capable team. It's always present.
there's a great book I read called The Upside of Stress. I don't know if you've read it, but her whole point is, successful people put themselves in stressful situations. And
Yeah.
so rather than fighting it, you embrace it and say, I'm in a stressful situation because I've put myself in this, and my body and my mind need to embrace that and run with it. It's really a
Hmm.
interesting way of turning it around, because you're right. When we were growing up, it was like, oh, stress is bad, fight it. It's bad for your body. And I think a lot of folks today figure out how to embrace it.
Yeah.
What about, you mentioned work-life balance. You love what you're doing. How do you think about that from a company standpoint? Or any tricks or tips that you guys have had along the way in terms of building the culture at Smartsheet about how you've told people to handle work-life balance, particularly over the last year during COVID, when frankly, all hell broke loose
Yeah.
a year ago? Anything you'd share with folks about how to disseminate that among the executive team and the team at large?
Yeah. I think there needs to be a constant presence of something you're looking forward to. Like the notion of like
Love that.
operating and generating a yield, it's like, yeah, that's super cool and important. But unless there's something like I had a new employee ask me at new employee orientation like 6 months ago, she said, Mark, why do you still do this 15 years in? Like, why? And it was so funny. It was this like you have hit. She apparently felt that I had hit some marker where I was done, and so I'm like, well, let me tell you about the good old days. The good old days. You remember when we didn't have any revenue, and the good old days we
Right,
had no
right.
capital. The good old days we were turned down. It's like no, I'd trade this time for that time any day of the year.
Yeah,
Right? It's like you're in it now. But even 15 years in, I still have that huge need for something that I'm looking forward to, Jeff. So whether it's a new release, like we're doing a massive overhaul on our UI and UX, like I'm super fired up about it. I'm excited about
hmm
what our customers are doing. I love hearing the customer stories. So I think that is this past year especially, people have needed to, not just at like the company mission level, but in their teams, they need to be very clear about what they're marching towards. And like the day of being sort of just an operator, it's like you will lose your people left, right, and center
yeah.
if it's sort of just, hey, keep cranking, head down. I know it's tough. It's like that's just not that inspiring.
No. So creating wins, creating milestones, creating things that people can. It's funny. We get the same question in our business, right? A lot of folks in our business have made tons of money and they're good. And people say, why do you still do it? It's like, man, there is nothing better and getting a chance to work with a great company. And there's
Yeah.
always new great
Yeah.
companies being born every day, and it's just an exciting part of what we get to
Yeah.
do, in Silicon Valley at large, but also just in venture and tech.
Yeah. And Jeff, I'll share one story with you. And I mean, it may sound a bit cheesy, but at the ripe old age of 48, I'm 50 now. I finally realized what brings me joy. And it's a super simple formula. It's like, it's mostly about the reactions that other people have. Like, if you can do something that positively affects someone else, that
Hmm.
is called lasting impact, like lasting feeling. Like, having a win for yourself in isolation is like, that is such a pop fade. It's like that. And like a
Yeah.
week later, you're like, oh yeah, that was pretty cool. But so when I think about, one of these, the story about having gone public and having become still from catering a very small group of investors to being a public entity, I'm in the gym one morning, and this gentleman in his 70s who's been in my locker row for more than a decade. I've probably spoken to him for a total of 6 minutes. He hands me a printout one day, and the printout was an email from an AOL address that he sent to his grandkids. And he said, "Kids, I've created a small account for you. And I wanted to tell you that I've gotten to know this company a little bit over the years, and I'm buying one stock in it." And it was Smartsheet.
Wow. Wow. That's
And it's
cool.
like, so when you think of that, it's like, that is
Yeah, that's cool.
so there are all these connections that you're not even aware of. And when you hear those, when you have those little moments, either a customer or shareholder, it makes you feel really damn good. And
Yeah.
it puts a ton of pressure on you too,
Yeah.
because you don't
It's
you don't
such
let
a,
those
it,
people
I
down.
mean, I want to wrap to be conscious of time, but that's such a
Yeah.
great note to end on, because I think so many founders and CEOs, as you grow and scale, I think we underestimate the joy that comes along with, we have a lot of founders today who say along the way, hey, I'm really proud of what we've created with the team. We're creating, value and wealth, and people are getting incredible career opportunities. And
Yeah.
it's such a hard thing for people from the outside to understand. So I love that. And I love the idea of also creating those wins along the way for folks and keeping them motivated, particularly in a time we've had like the last year. I don't know about you, but it's been tough, for everybody, not just in tech, but the society at large, and just giving people wins, giving people things to be excited about hasn't been easy.
Yeah, and I think, when I look at, one of the principles that we've learned as a SaaS business is the importance of winning on a net basis. So the idea of operating and growing isn't about pain avoidance. It's like, no, pain's good. Pain's good.
Hmm.
Work's good. Challenge is good. But just for your wins, like, trounce the things on the
Yeah,
negative side of the equation.
yeah,
So it's anyhow, it's enjoyed spending a half hour
I
with you,
love it,
Jeff.
man. Thank you. Thanks for spending the time. Everybody who tuned in is going to love it. I appreciate it. Congrats on all the success. We're going to keep
Okay.
rooting for you. Thanks,
Thanks
man.
much, man. Bye.
Take care.